I will tell you, just in my history of doing this, my favorite market as far as where rates are is when rates were in the fours. I just
Yeah.
felt like that was the most level market. It had posed the most opportunities for refinance.
What's up, y'all? My name is Derek Peterson. I am the host of the Austin Home Guy podcast and real estate agent here in Austin, Texas. The best real estate agent here in Austin, Texas, of course. It's per my Derek Peterson standards. And I work with the best lenders here in Austin, Texas, aka Kyle Carrington over at Guild Mortgage. How you doing today, Kyle?
Yes, sir. What's up, buddy? I'm good, man.
Dude,
I'll vouch for that. You're the best realtor I've ever seen, buddy.
oh, stop it. Says the guy whose income relies on me from time to time.
That's you know what?
You
That's
can
not
butter me
relevant.
up. I'll take it. I'll take it.
That's neither here nor there, dude.
I would do the same thing. So dude, how are rates looking this week and where are we at?
Pretty good. Locked at 5.875 yesterday. Little 5% down loan. That was conventional,
Fantastic.
obviously. Yeah, that was pretty sweet.
So yeah, that's down even from just like 2 or 3 weeks ago. That's fantastic.
Yeah, and rates went up a tick too yesterday too, because little unrest in the Middle East, and jobless claims were actually not as bad as they had projected by about like 50,000, something like that. But I mean, they moved up. I mean, it was almost insignificant, but
Yeah.
still.
But still enough, dude. That's good. I mean, we're starting to see that, which that in general tracks with my business at the moment, because we have seen like a slight uptick in buyer activity. The hardest part right now on our end is just that we still haven't seen that rush of spring inventory. And so
Yeah.
most of what's on the market, like all of my buyer clients that started searching in like November of last year are starting to get a little bit antsy because inventory is not great. And because things were sitting for so long last year, a lot of people pulled the listings or are potentially a little bit hesitant to list right now. A lot of people are trying to wait and see a little bit how the market's going to respond to everything that's going on in the world at the moment. And so we're in this like giant game of chicken is what it feels like at the moment. So,
Yeah.
So rates are down. Today, I wanted to discuss the importance of, one of maybe a few topics is how important are good reviews for a lender?
Pretty
Kyle?
darn important. Really important.
So you've been doing this forever, and
Yeah.
from my understanding, and it's funny because I have a couple other lenders that I talk with pretty regularly because they call me incessantly. And
Really?
yeah,
Never heard of such a thing.
I'm in a polyamorous lender relationship, Kyle. So no,
I don't like that at all.
Yeah.
I don't like anything you just said right there. It's weird.
No,
It's like if your wife talks to like another dude, even though it's like harmless, you're like still like that doesn't make me feel great.
yeah, you're like, you think he's better than me? What's going on?
Yeah, I know. Just because he's taller and better looking, that doesn't mean anything.
He's a jerk.
Yeah.
His wife doesn't even like him.
Yeah, she's not even here.
Yeah. No, but most of the lenders I know are fantastic because they've been at it for a while, and I've been doing this for 11 years. And once you're this long in the industry, you're typically around people that have been in the industry for as long as you have been. So, and it's actually pretty rare for people to get negative reviews unless you really mess up a deal. But I bring this up because we recently did a deal together and you got maybe your first negative review. So tell me a little bit about that.
First one ever. Positive thing is, if you look at the overall average, it barely moved it considering how many reviews are in there. But yeah, so we had a listing agent that we send out an email to everybody involved to basically offer an opportunity for them to write about their experience with us. And so he decided to give me 2.5 out of 5 stars because the loan closed on time. We had it clear to close early, and docs were at title, 2 days before closing. So that's tough. But yeah, but the problem for him was that I didn't call him every time there was movement on the loan. So he wanted me to hold his hand through the process, which I didn't know that he wanted that. Even though at Guild, our system does provide automatic emails for every process once the loan's approved out of underwriting, once appraisal is in, and then for the clear to close. Um, yeah, so
Yeah,
he
I can't believe y'all even send listing agents the opportunity to review you because, like, this is here's my take on this. And I was furious on your behalf because, one, it was my clients that hired you, and my
Mhm.
clients were elated with their service and loved you, to the point where, this is their second transaction they've used you
Right.
on, second home they purchased with you as the lender. And additionally, they have referred you like to other people
A
that
bunch, actually.
yeah, yeah. And so the fact that the listing agent gave you a negative review, and I actually told him this. Like, my initial response to him was like, look, so normally my team, we recently changed our team around a little bit. We have a new transaction coordinator, and so because we have a new transaction coordinator, our old transaction coordinator used to do things that the new one doesn't, and it's all just kind of growing pains, right? So normally there is usually some growing pains when you bring new people on team, and our old transaction coordinator would send out updates along the way, and we were in such stride together that I never had to really worry about what she was doing. The new transaction coordinator, we hadn't really fully discussed the lender updates, and me and yours working relationship has been one that I've told you in the past, like, hey, our transaction coordinator is updating everybody, so don't stress about it. Like, don't worry about doing it because they don't need updates from like 6 different people. That ends up looking more discombobulated, right?
Yeah,
It
no, it
looks
does
better if all
actually.
the yeah, it looks better if the updates are coming from one person, and our transaction coordinator historically handled that. And so I told the listing agent that this was my fault, and I would appreciate it if he could, take down the review. And his response was, well, this was my experience. And I was like, so your experience was you never heard from the lender. You heard from me multiple times that everything was fine. He heard from me after the appraisal. He heard from me that we were cleared to close. He heard from me at the end of the financing period that, hey, financing was approved. So all of those were taken care of, but he didn't hear from you during that time, which then, like, that drives me crazy. I'm like, dude, it is your job is not to deal with the lender. That's my job when I'm on the buy side of the transaction, is to manage the lender and my clients. Your job is to manage the seller and their situation because you're on the listing side. And so the audacity of him to review you negatively when there was no hiccups in the deal closed on time. There was not even a moment during this deal where things got dicey. Uh, and so I'm like, yeah, dude, this makes zero sense. So ultimately,
Yeah,
he can, you know,
yeah. Go kick some rocks with socks on or something, I guess.
there you go.
But
That's a much friendly version of
yeah,
everything that was running through my head. So
yeah. This is a family friendly podcast, dude. We can't just be, you know.
yeah,
But
but you're right though. Like, these reviews matter. Like, dude,
no, yeah,
if
they do. Because of Google searches or AI searches, just like you showed me the other day, that's a search that someone does is what is a lender that has good reviews, and so he kind of messes up with my algorithm there, or my SEO
absolutely.
rather.
Yeah, absolutely. And like, look, we're not expecting perfection, and I'll accept a bad review when a bad review is warranted. Like,
Yeah.
if I messed up, and historically there was a few deals early in my career that I messed up, and there was some times that I dropped the ball where I had like new clients onboarding that were looking for specific properties, and there was a couple times specifically when I was going through my divorce that I had told clients I would get back to them on something, and then I just never did. And I got bad reviews for that, and I was like, that is a fair review. So
Yeah,
I'm not doing my job well at the moment, and you called me out on it, so fair point. But dude, in a situation where the bad review isn't warranted, it just makes me want to go find a bunch of somebody that has an army of bots and leave reviews all over his page.
yeah,
But not going to do that. No retaliating. We're going to stay
yeah. I'll
friendly.
just leave it up there too. If someone wants to read it, they can read it and
Were you able
judge
to
for
respond to
themselves.
it?
My system does an automatic, friendly response, like I'm a restaurant or something, so it's all good. But
All right.
and if
Well,
anybody's looking at it, they can go through and they can look at hundreds, of good reviews. And luckily, like you were saying, back when you first started and you messed up a deal, you may have gotten a bad review. Luckily, for me, um, when the last time I messed up a loan, computers weren't invented yet, so you know we actually chiseled applications on stone. I don't know if you knew that, but it's a fun
that
factoid for you.
that that's back when you could get a mortgage and like it was the stack. It was like three pieces of paper you had to sign.
Bro,
Uh,
I remember walking files into and handing it to the processor, and then my processor, because she was lazy, she made me walk over to her desk, grab the file, and then hand it to the underwriter. I'm not even kidding. This was at Wells Fargo.
yeah, dude, I've been in the industry long enough that early in my career, I had clients that did not want to sign anything. And so I
Yeah,
would print contracts, drive them to their house, have them sign. Then I would scan them back into the computer and then send them to the title company. It was a lot of extra driving and work. But yeah, I mean,
we
I'm
would
glad
fax
those,
them.
yeah.
We had fax
The,
machines.
well, COVID like ultimately pretty much destroyed the end of
No
that. Like,
question.
like there
Yeah,
was there was still some older clients that would sometimes prefer a wet signature on things.
yeah.
And every once in a while you still see it on sellers disclosures and stuff like that as well, but for the most part, most people are like pretty confident and comfortable e-signing. E-signing was like kind of similar to those like the first time you got a credit card and you were asked to put your credit card into a website and you're
Oh yeah.
like,
Like,
yeah,
feels
this
that's
I don't know if I
rather
feel good about this.
now it
Now we
saves on
just
your computer.
yeah,
it's like
now we
it's
give our
like
credit card
which
to
one of your
everybody.
50, yeah, I know. It's like which one of your 50 credit cards you want to use? I'm like, oh no.
Yeah.
They're all maxed out, doesn't matter. Just kidding.
I'm like, actually, I get more frustrated now when Google doesn't pull my credit card information up automatically and give
Like,
it to
where's my
some.
wallet?
I'm like, gosh dang it, I've got to go get my wallet. I
Yeah,
thought I had
that's
this stuff saved in my pass chain or my keychain or whatever it's called.
yeah.
So the is there so are you working on any interesting deals at the moment?
I mean, I already closed it, but I did have a deal. Was something came up that was nice. So we were kind of trying to put together, a loan for a specific home that was around 350 grand. And they didn't quite budget for it. It was just a single gal, W-2 salary income. I forgot how much over budget she was, but it was a fair amount. And so, I was like, well, do you do, first I asked if she had any cosigner opportunities, and that wasn't a thing. And then I asked her if she, well, do you have a second job, or, are you going to get a bonus or anything like that? She's like, well, I actually been driving Uber for the last 14 months. I was like, do tell. And so, um, she had been working. She'd been driving Uber like Saturday, Sundays, and just like maybe a couple times, in the evenings during the week. I don't remember if it was Uber or Uber Eats, but either way. So I was able to get 12 months of bank statements, and we were able to pull income off of those from her, her self-employed income. We added like $1,300 a month of income, and then the loan worked out.
Oh, dude, that's awesome.
Yeah,
That's a win.
yeah.
The
So
and
we
I
call
feel
that
like
non-QM income.
Yeah, dude, that's awesome, and that those situations don't always work out that way. So that's
No, yeah, that
fantastic.
doesn't come up very often, but it is nice when it does.
Yeah, absolutely. The straightforward W-2 loans are obviously the easiest, but in our industry, and especially over the last few years, there has not been a lot of anything that's easy. So
Yeah,
when even the ones that you think are going to be easy end up being usually causing you to jump through some hoops. So
yeah.
before we call this off, what do you where do you, and I'm not going to hold you to this, but what do you where do you see rates going over the next like 3 to 6 months, and at what point do you encourage people to look into refinancing?
I mean, that's a good question, and that it's kind of a as far as the refinancing goes. I guess it just depends on what kind of payment reduction you can get. Well, I'll answer your first question. As far as what rates are going to do, I don't think they're going to move in the next 3 to 6 months. That's just my, if you ask me to put some money on it, that's what I would do. I don't think. I mean, we're going to see that pendulum swing a little bit, but I don't think they're going to move very much in the next 3 to 6 months, maybe even longer. Um, as far as refinancing goes, I always say a 1% reduction is worth a look. Um, Now, if you only borrowed, 150, 200 grand, a 1% reduction in your rate's not going to knock your socks off. But if you are sitting on a four or five, $600,000 loan and you can drop from a, 6.99 to a 5.99 or 5.875, then you can certainly see some value in that. I actually have one right now that I'm working on. The loan amount is 330 grand. She has a 6.875, and we're looking at, I think, 5.875, no points on that one, and I think her payment's going to go down just under $200 a month. So
Nice.
not super duper exciting, but that's $200 a month, and the reason it might be a good idea just to get it over with is because rates probably aren't going to move that much anyway. So,
Yeah.
um, and
The
it
I'm
depends on the
curious what
situation too.
happens. Yeah, I'm curious to see what happens with the Jerome Powell stuff come May, because it's technically I think the end of his term, right?
I thought it was earlier than that, but yeah, that sounds right.
Is it? It may be April, but I mean I know we're coming up on it, or maybe March or April, but I'll be curious with because it's Walsh is the next Fed chair, and he is on the president's you know speed dial list, which means he will likely do what the president wants him to do, which is, and if that's bring down rates, we could see a to some degree forced drop in rates over the summer. So
Yeah,
especially with midterms lurking.
I will tell you, just in my history of doing this, my favorite market as far as where rates are is when rates were in the fours. I just
Yeah,
felt like that was the most level market. It had posed the most opportunities for refinances, like for a cash out. You're not, jacking your payment way up. Um, the other nice thing was FHA loans, because the government loans are going to have a little bit better rates. So you would see those, poke into the threes, which was nice. So you kind of, you'd have times where rates were in like the low fours, and then you can get the FHAs in like the high threes, and that was my favorite time. I want to say
yeah,
that was like 2019. Does that sound right?
yeah,
I don't know. It's all a
yeah.
blur, but
I mean, rates fluctuated. We got up in like the fives, like high fives, I think in 2018 for a
18.
minute.
Yep, you're 100% right. I remember that because I thought that was when the sky was falling, when rates had gone up. In fact, I remember I was doing my buddy's deal, and he was shopping for a home, and rates were lower, and then all of a sudden they spiked right when he went under contract, and you know rates were in the fives, and I was like, "God, this is the worst time ever." Um, and I miss it now, but
Yeah.
um,
Well, yeah, and then everybody refinanced out of that in
yeah.
2021. So
Oh
the
yeah.
but the yeah, it's interesting to see what's happening, but I do think we will see refinance if we get even, I mean, mid fives. Once we hit like 5.5, then we're at that 1%. But then notably, we're at that 1% marker where a lot of people have purchased over the last few years. Because I
Yeah,
feel like over the last few years, most people that I've worked at locked in somewhere between like 6.3 and 6.75. So we get into like the mid fives. And yeah, you got
there'll be some
that one.
opportunity there. Well,
Yeah,
dude,
you
some
got that
people are in the
1%
sevens
opportunity.
and eights too. A lot of those new
I think those
construction
people have,
deals.
yeah, I think those people have, I think a lot of the, because I have seen refinancing, at least, I don't know that I've had anybody get up that high. I
Me
think the
neither, because
lowest,
I looked at my whole list and I didn't have anybody above like 7.25 at any moment. So, but
yeah,
I do know that there's some that got up there in the eights.
yeah, which makes sense. So,
Yeah.
but, well, cool, man. We will, this is a just kind of a quick market update podcast. We hit that 20-minute marker. This is usually where, if anybody's actually listening to us for this long, they're going to quit
Who are
anyway
we
here. Just to,
sponsored by?
oh, who do we want to be We are sponsored by the Detroit Lions and the Houston Texans. Is that
Yeah.
both of
That
both
would
of
be
whom
sweet.
keep playing with our hearts. So,
Yeah. Yeah.
uh, hey, I'm gonna make it to a championship game and then never do anything else,
Oh, my
jerks.
whole team's good except my quarterback. Cool.
Which is funny because like 2 years ago it was the opposite. It's
Yeah,
like
I know. It's like
our quarterback's great, but our whole team sucks. So
I think we're not allowed to have nice things in Houston anymore ever since the Astros won two World Series and one of them, according to everybody, is illegitimate. So not to
I
me,
blame you for
but
cheating. I blame you for
well,
cheating.
I was banging on the trash cans as good as my little heart could. They don't just
Well,
home runs don't just come easy.
look, dude, if we maybe we get a Houston Detroit Super Bowl this year and then both of our lives are complete. We
Yeah,
can
heck,
we're
we can
good
maybe.
after that.
We got 10 grand
Actually, I
for a
think if
ticket.
that happened, I might stop watching sports if that happened because I'm like, all right, I don't know if I think this is
Yeah,
the
it's
pinnacle.
all done.
It's over.
That would literally no. That would honestly probably be like if the Texans win a Super Bowl before I go 6 feet under, that would be amazing.
Yeah, I
But
don't think that's happening for me with Detroit, but here's to
I don't.
hoping.
Yeah, yeah. I'm not going to hold my breath because then I'd be dead in 30 seconds. I can't hold my breath long.
Right. Well, cool, man. Well, we'll check in a couple weeks and see where we're at.
All right, buddy. Have a good one, dude.